You see? Okay. You go ahead in the intro.
Hello and welcome to the Cash Furnace. My name is Paul Kinzerski, and together with my co-host Eric Downs, we aim to become your go-to source for daily stock and crypto news. Today's date is February 9th, 2021. In today's podcast, we're going to cover a little bit more on Tesla buying BTC, maybe some of Elon's genius, the reasonings behind why he might have bought this other than for the hype, other than the fact that he thinks that this might go up in value. We're also going to give you a brief BTC and ETH update, Bitcoin and Ethereum. I've been looking at a lot of on-chain metrics. I've been looking at what the big boys are doing. We're going to give you an update on where I think things are going. Thank you for tuning in. If you like what you see and you want the news to keep coming, you know what's coming next. Hit those big three. Make sure to like, subscribe, comment, share it with a friend. Help us run up this algorithm. Let's make some money. All right, Eric.
Paulie, honestly, today's gonna be a Paulie episode, man.
Yeah, I suppose
Paulie's
so.
He's coming with the content.
Yeah, with the heat.
Yeah, he's got some good juicy stuff to talk about. Go ahead, take it away, Paulie.
So we were talking briefly before, as we do our pre-recording sessions, and Eric and I both watch this guy called Meet Kevin is his YouTube channel. He's very popular. I'm sure everybody knows about him that may watch this. Millions of subscribers. The guy pumps out like 5 videos a day on economy, politics, housing, you name it. But he came out with a really interesting theoretical video today on why Tesla and Elon Musk might have decided to buy these Bitcoin assets. And one of the positives when it comes to tax implications every single quarter when they have to report on their earnings. So the basic premise of this is they bought $1.5 billion in Bitcoin, correct?
Yes. Correct.
So utilizing Bitcoin's volatility is something they could actually use to their advantage. If, say, Bitcoin drops 20% tomorrow and that $1.5 billion investment, we'll pretend like they actually bought tomorrow and not a month ago. That $1.5 billion investment goes down to 1.2. Tesla can take that $0.3 billion, that $300 million, and basically write it off as a loss for that quarter so that any other profits they made for the company can basically be tax-free, right? So the interesting part about this, actually, I'll get into that later. The opposite side of this is that if it goes back up and say it goes all the way to $2 billion, they only have to pay taxes. They only have to say they earned up to their initial investment. So anything past that $1.5 billion mark basically can just be written in as an asset to make their balance sheet look good, but doesn't have to be taxed at all until they decide to sell in the future. So what's interesting about this, and what really perked my ears up with the Meet Kevin idea, is that they're definitely going to use this for tax purposes, right? But what uneducated investors might see if they do incur a loss from this Bitcoin is it's going to make the earnings report look really shitty and subsequently drop the price. So even though if you don't know what you're looking at when you're looking at earnings, you just see that they completely missed what was estimated. You might say, oh my God, I need to sell my Tesla now. This company's going downhill. Little do you know, everything was going completely fine. They just took advantage of a tax loophole that they found. So if Bitcoin does go down significantly, Tesla might actually be a really smart buy after that earnings report if it does stay suppressed.
Yes. Yeah.
Because then in the next one, if it goes back up, which it always swings like crazy, this is an extremely volatile asset, and they have to write in that $300 million again as profit because now they're back up to that 1.5 or past it. All of a sudden, the earnings looks fantastic, and everybody wants to buy in.
Interesting. So if I'm to summarize what you're saying, Paulie, if I'm understanding you correctly, what you're suggesting is that when Tesla earnings approach, and I'm looking them up right now. I don't know exactly where they are or when they are rather. Do you know when they are?
I do not.
Did they just January? Oh, okay. Ah, yes. Here we go. Oh, did they just have earnings on January 27th?
I guess so.
I don't even
It's
remember
not
that.
something I follow often because I don't ever plan to trade my Tesla. But
Yeah, no, I don't either. Whoa, that's interesting. I'm looking at the schedule here. It says last one is January 27th, 2021 at 12 a.m. Eastern. Is this right? This seems weird. And then the next one is April 27th, 2021, 5 a.m. Eastern. Okay, Yahoo Finance. Let's take a break from you. What if I'm understanding you correctly, Paulie? What we may want to do is, as Tesla's next earnings report comes up, take a look at how Bitcoin has done since this announcement, and presumably a little bit before this announcement, because surely he's been in before it was disclosed. And if Tesla's been doing good, it could serve as a great pad to their balance sheet that could send their earnings up. And if Bitcoin has underperformed, if it's gone down since this approximate time, then you may want to get your cash ready.
yes,
Is that what you're saying?
the biggest key here is to find when they bought in, which is common knowledge right now. It's out there. They know when Tesla bought in. I don't know the exact date off the top of my head, but I believe it was mid-January, somewhere around the 15th is when they decided to buy this asset. So we look on that day, I do know their average cost was $33,400 something. So
Pretty good price.
So say Bitcoin is at 30K, you can reasonably think that they're going to drop that as a tax loss. And perhaps you get a deal, or you sell out early and you buy back when everybody panics, or something like that. However, like you said, we know their initial buy-in price of 33.4, and right now I'm really struggling to see it getting there. That's the one thing. Getting back down to that 33,400 level would, at this point in time, be extremely, extremely bearish, and I can't see that coming. We just started hitting this next leg up, and we don't really see the momentum slowing down right now.
I was going to say the momentum is looking great. Like that's a really tough that's really tough to envision that. Granted, we have, I guess what we have what, a little over about 2.5 months until this earnings report. Yeah, of course, anything can. Yeah, we would have to see, something really drastic happen in the world of Bitcoin to see it drop back down to those levels and lower.
Right, and actually, perfect segue into the first numbers I was looking at for Bitcoin. So this was just the S&P 500. If every single company on the S&P 500, the top 500 companies on the NASDAQ, took 1% of their cash holdings, it would raise the price of Bitcoin from where it currently sits today by $40,000. That is 1% of only 500 companies.
Wow. I mean, and that's, and like we've been talking about, previously, obviously we can't speculate or begin to guess whether or not that's going to happen, but the likelihood of it happening just shot up.
Oh yeah, an incredible amount. It's only a matter of time before we see whatever next progressive company buy in. Now, there's of course rumors about Apple, but I think those rumors are very hope driven because Apple has the largest cash balance sheet out of any company in the world, right? So of course everybody's like, "Ooh, if they bought in, if they put 1% in, that would be a big deal."
Right.
Which gets, I mean, the idea gets me really excited too. Why wouldn't you want to, have that kind of thought process? But from everything that I'm reading, Ozark is likely the next company that's going to announce that they're in Bitcoin. And again, this is speculation, but this is based off of the fact that right around that January 15 mark, Elon Musk tweeted about meeting with the leader of Ozark. And they said interesting theories on where future capital should go, which is very indicative of with this recent move into Bitcoin, where it might be. So it's only a matter of time. It's just a question of who's next. So
it's literally like a row of dominoes. It honestly is.
Yeah.
And the
absolutely.
biggest and one of the biggest ones just fell.
Yep. So another metric I've been looking at is Google search trends, which I think is actually super underrated when it comes to creating theses on any stock, any crypto, anything like that. If you look at the searches for Bitcoin, what is Bitcoin, opening wallets on Bitcoin, all of that, retail investor interest right now is actually nowhere near where it was in 2017.
Really?
So, yes, what that implies, and it also backs up the information we already know, that these recent pumps have been largely fueled by institutions buying massive amounts of it, right? Not retail traders buying massive amounts of it. On the flip side, what has been spiking and is at all-time highs for retail investors for Google Trends is Ethereum. What is Ethereum?
Oh.
How do I open Ethereum wallets? So I think this further goes to prove my point that institutions don't trust Ethereum yet. They're just getting their toes wet. They're just starting to understand Bitcoin. They're just starting to understand the premise of what blockchain technology is. And they're getting into the big boy, the original guy, the one that everybody's been talking about for years, right? The most trusted crypto out there. And it further, at least in my mind, solidifies the point that Ethereum now is still extremely undervalued because institutions haven't decided to start buying in massive quantities yet. We just launched CME futures for Ethereum on Monday. For the first time, there are futures for Ethereum. Bitcoin has had futures for 2 years now.
Okay. So the Ethereum, the Ethereum pot is starting to simmer, right?
Right.
And let's see what's going on. Whoa. I just looked at Ethereum. I didn't realize it broke out of its the little channel it's been in for the last week or so. That's interesting.
Yes.
It's interesting. And this is I know we're planning on saying this for a future standalone episode, but Paulie, if you could, for our viewers who aren't familiar with that, including me, can you tell us a little bit more about the future of Ethereum and the future evolution of Ethereum?
So sure, ever since we had the podcast where you basically asked me the general outline of how Ethereum worked, I, to my embarrassment, couldn't really logically break it down to a teachable point. So I've been doing a lot of research into what is Ethereum, how exactly does it work, and the easiest way to kind of make a comparison in my mind is to consider it a software.
Okay.
Well, don't even consider it a software. It is a software. It is a blockchain-based software that you can build upon to basically build any sort of blockchain based anything, currency, game, doesn't matter. The cool part about it is you don't need a network. Basically, you don't need a server, the equivalent of a server. If you're, think about it like this: you want a website, you want it to be easy, you're not a programmer, you go to Square, right? Square has all these templates laid out, it's very simple, they have servers provided, and for that service, they take a portion of your sales, or you pay them for server fees, or
Sure.
whatever, right? The higher traffic that's utilized through that website, the more you're going to pay Square, right?
Sure.
So Ethereum is the equivalent of that. Ethereum has this thing called gas. Gas is simply a formula on which the fees are basically calculated. So say you have they're called ERC, Ethereum, fuck, I forgot the name. It's a Ethereum based token, right? You have an ERC20 token. What that is a token, all those little coins that you see, a bat or something like that, is built utilizing the Ethereum network. That token, in order to make a transaction, needs computer power in order to make that happen, right? It needs all of the different ledgers that are on the network that is a blockchain technology. It needs all those to make that transaction happen. So what you're doing, what this calculates is how much computing power is needed, and that is your gas fee. Now, the people that have these nodes are what runs the Ethereum network, right? They can choose what gas fees are profitable for them. They can choose when their computer utilizes that its computing power in order to conduct a transaction. If your gas fee is high enough where that person that's running a node becomes profitable, then you get to use their computer. Does that make sense?
Sure. Sure. Well, okay. Well, Paulie, I have a feeling. I have a feeling this maybe us going into this depth actually would be really great for that standalone episode.
Right.
But I think you've already sort of popped the cover to the book here, and so I already just even from that simple explanation, have a better understanding of what it does, and it's very interesting to me to think that, like, I mean, am I understanding this correctly? That anyone wants to build a blockchain anything, Ethereum essentially is the framework with them to do it.
There are competitors out there.
Are
However,
there any bigger than Ethereum?
No, not even close. They have like
Ethereum's the main one.
85% plus of all crypto-based tokens. Very, very simple analogy that will come across in your mind. Bitcoin has constantly been referred to as digital gold. What Ethereum is digital oil. It makes the world run. Right?
Oh, so it actually has a functional purpose instead of just being some sort of representational nominal token. Yeah.
Yes.
That's
yes.
interesting.
In every transaction that happens, you want to be buying land in the Middle East right now, right?
Yeah.
Buying into Ethereum is the equivalent of that for the future.
Interesting. Okay. Wow. Okay, I actually really look forward to do a deeper dive with this with you, because I didn't really realize Ethereum that we sort of the Ethereum cryptocurrency that we noobs and refer to, like such as myself, is really just one, if I'm understanding correctly, is really just one application of Ethereum.
Yes. That is
Interesting.
Ether. The ETH that you have, the coin that you have, is actually Ether. And that's how people get paid to use Ethereum network.
Interesting. Okay.
Yes.
This makes a lot of sense. This now I understand why Ethereum is as powerful as it was. Because up until
Right.
right now, I was just like, is this not just Bitcoin too? Why would anyone like this? Now you've totally explained. I'm not totally explained it, but like, now I understand what you're getting at here. I
And
see the potential.
the coolest part is that it has unlimited applications. All you have to do, all they're providing is the service saying you can utilize our network. It's the equivalent of saying, sure, build a car. We have gas for that. You want to ship something in your boat? We have oil for that. It's You want to heat your house? We have gas for that. Like there are so many different applications for this token to be utilized. It is just so unbelievably undervalued. I really do think there will be a point in time in the future where it will be smarter to hold Ethereum than Bitcoin. Once
Wow.
Bitcoin levels off, because its biggest asset is supply and demand. That's why everybody's buying it. It's limited supply.
Hmm.
Because nobody's. How many people do you know that actually paid someone in Bitcoin?
I I know one person. I know one person who's ever
It's
done it.
extraordinarily rare.
It was actually Will. It was Will who we had on the
I
podcast,
believe that. Yes.
and he paid for a friend's old an old iMac computer back in the day. This is like many years ago. I think it was for like 3 Bitcoin. But I mean, it was when that price made sense for a
That
computer.
$120,000 computer right now.
Yeah, I know. Well, the thing is, the seller of that computer is a friend of ours, so I mean, it's like a running joke because she doesn't give a shit about. So I mean, she talks about it because it's interesting, but she happens to have it because because a computer that she wanted to get rid of. Will was just like, "Let me give you something." At the time's like, "I'll give you 3 Bitcoin."
Oh, that's great, man.
Yeah, dude.
Hey, you're making your friends rich. Why not?
Yeah, seriously, that was the best sale ever. Literally the best sale ever. Oy.
That's great, man. But yeah, it makes me really excited, especially seeing those the fact that this recent pump is pretty much solely driven by retail.
Hmm.
It means the big boys aren't even paying attention to it much. And what do we always say on this podcast? You make the most money when people aren't looking, right?
Mm. Yep.
It's
You look
when you
where.
buy, it's not when you sell.
That's right. That's right. Um. Well, I think with that, I think that's a great place. I think that's a great place for us to wrap today. What do you say, Paulie?
I'd say yeah, that's a good way to end
Another
it.
information packed, jam packed episode brought to you today by the Cash Furnace. Folks, if you've enjoyed the show, if you'd like to see more, we ask 3 favors of you. Just like, just comment, just subscribe. Hit that notification bell. Share this with a friend who you think could benefit from this education, this information, and help us make more money for more people.
That's right.
See you next time. And we're off.
Nice.